Hello, everyone. Welcome to another episode of the Index Podcast, where we come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, I have with me Hildobby, resident data house at Dragonfly.
Hello, everyone.
And I have with me Danning, chief on-chain sleuth at Pantera Capital.
Hi.
And we have a guest today, Ali, Fullstack Research Honeybee at Pantera Capital.
Hi, everyone. Thank you for having me today.
And I am, of course, Boxer, and I'm the community powers at June. And today, before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We're acting independently of our respective professional roles. But now, today, we're going to talk about digital asset treasury companies. Digital asset treasury, DATs, whatever that stands for. We'll get into that in a second. But I think we're looking at the entire research team of Pantera Capital. So lots of research being done over there, because both of these ladies work for 10 people. So I've heard. But maybe let's Danning, obviously everyone's familiar who Danning is, but Ali is a new guest and might not be familiar to a lot of people in the crypto industry. So maybe Ali, tell us a little bit of how you ended up here.
Yeah, I'd love to. So my background's actually in structural engineering. I did that for like 4 to 5 years after school. I was designing like high-rise buildings all around the world, predominantly in the west coast of the US and out in Southeast Asia. But while I was there, I kind of taught myself how to program and code, starting with VBA and macros and Excel sheets, and kind of obviously went to Python because it's much better for a lot of different tools. But yeah, around COVID, I started building bots and like algo trading. And naturally, I don't know, kind of ended up looking into crypto because it was easier to trade that than a lot of equities. After that, I don't know, went down the Ethereum rabbit hole and kind of kept learning about my own time and got tired of my current job as a structural engineer. So, a little bit tired of the job, tired of the office life, wanted something remote, and kind of stumbled upon Messari. So I was at Messari for 2 years on their long form team. And last April, I joined Pantera as the research engineer. So full circle.
Okay. And now what's your day-to-day life as a research engineer look like?
It varies a lot, I guess. Mostly data work, a little bit of dev work and building applications, and then the occasional writing to kind of, publish and kind of talk through what we're doing at Pantera.
Okay. So research engineer, can you be a research analyst and a research engineer? Is that kind of like the differentiation that people are making?
I guess so. I think it's more data work, I think, as a research engineer. So you're more in charge of like finding and kind of data engineering and sourcing all these different data types, rather than just writing, kind of talking about findings, if that makes sense.
Yeah, it makes sense. Developer relations also oftentimes has this, like, you can be like a developer relations engineer, like that means you're like closer to the actual software. And then you can just kind of be like a yapper. You can just like talk to people and like talk about the technology, which is I don't know. I don't think there's an official term for like the other part of DevRel that's not engineer. But anyways, Jenning, you go ahead.
Oh yeah, I was just gonna say, I think like Ali as a research engineer, I mean, I see myself more like maybe as an analyst, but she has a filling the blank of my skill trees. It's like she can just spin up, front end, back end, and she will be like, okay, if you let me know how you want the front end look like, and then we have a website. So that's why also we're here, because we've been building a DAT dashboards and hoping to basically present all the data better and everything. So.
All right, exciting. With that background out of the way, let's dive right into the topic. And I think, Hildobby, you might have a good explainer of what digital asset treasury companies are. So go ahead.
Yeah, I just want to go very simple. It's essentially just crypto holdings of any company. That's like the broad definition is just this. And then you can have various ways and various reasons for those to exist. Are those tradable on the NASDAQ and stuff like this is maybe one of the reasons to get like institutional adoption or getting these, TradFi exposure, getting TradFi exposure towards the crypto industry. I just want to remain simple. to keep things clear in the first place, and then we'll dive into it as things go over the podcast.
But maybe make it a bit more plastic. Like, what's the biggest example of like any digital asset treasury?
So, I mean, the biggest one that comes to mind is going to be Strategy or MicroStrategy previously, with Michael Saylor, who's been doing this like leverage trade on Bitcoin as a hedge against inflation. And yeah, they've been putting all their treasury into it. I wouldn't say it's risk-free. I think they've been taking quite some risk as well, but it's paid off pretty well, and the stock has been skyrocketing ever since. And then since a few months ago, you've had, other cryptos seeing DATs pop up, most notably Ethereum and Solana, which have seen several, and that Danning and Ali will show us in their dashboard how the data looks for those.
Yeah, I mean, like the story in my head about like the 2025 DAT era is basically just like a few months ago, there's this guy, Tom Lee, who become such a meme, like he basically is a MicroStrategy or like Michael Saylor of Ethereum. And people kind of attributed the price growing of Ethereum and overall maybe a little bit of the whole market in the past few months towards basically him and a few other people starting to really push like DATs in the Ethereum asset side. Basically, MicroStrategy have been doing it for years, and it's kind of being proven to be a model that's kind of like working like a reflexive like flywheel that's like basically going to push the price goes up and also works as basically a stock company investment asset. Actually, also Cosmo from Pantera was one of the early pusher for DATs as a thesis. So basically, TLDR, Tom Lee joined this maybe he was in a company, but he's now on the board of BitMine, and they are a company who I believe I'm not sure actually, maybe used to do Bitcoin mining, I believe, and now they are basically holding Ethereum as an asset as basically the net asset value on the balance sheet of their company. And basically, if you're on the stock market, you should buy their stock if the price is below whatever they're holding as, because you're buying at a discount. And so there's a few other people also been pushing this, like Joe Lubin from Consensus, basically who has been advocating for Ethereum actually, started with a few other people in SharpLink. And there's also Electric Capital, Etherealize also participate in this one called ETHDILA. And Pantera has a DAT for Solana called HSDT. Kyle Salami has one. Obviously, he's a spokesperson for Solana. And I believe I've heard CZ gonna try to launch a BNB DAT as well. Like just like it's popping everywhere. It's becoming kind of like the meme of the cycle. Well, I know like now the memes of the cycle is X4 too, but but Verachain was gonna launch a DAT, and Polychain investing a Vera DAT for 500 million or something like last week. It was pretty insane. So yeah, we're definitely in the DAT era, even though I feel like the hype or maybe the peak bubble are like kind of passing over us. But I think it was also such a controversial debate because people have a lot of critiques and some people have like positive comments about it. We will discuss it in a minute. But yeah, it's kind of like pretty relevant at the moment.
Yeah, I think it's relevant, but it's slowing down a little. For Ethereum, there's been essentially almost 5% of the supply that's been put into DATs over the past, I don't know, 4-6 months, I want to say. Most notably with like BitMine, they want to hold 5%. They're at like 2.7. There's SharpLink at 0.7. And the Ether machine, I think like half of that, something like that. But yeah, and it's slowed down a little as things cool off. I think there's all the things that are adjacent. For example, ETFs now allowing for staking. I think that has an impact on Ethereum DATs as a comparison between the two. But yeah, let's I don't know. Do you want to dive into the data and show us a bit more?
Boxer, did you have any take on DATs you wanted to mention before we start sharing?
I think we should kind of like, for Bitcoin especially, Bitcoin you can also trade through an ETF, which is like, why would I invest in MicroStrategy? Like that's a bit weird. And the same with Ethereum, like there's an ETF. So like, what's the reason all of these digital asset treasury I mean, there's kind of like you can just have a few digital assets in your treasury, or your whole company strategy is essentially, I'm a digital asset treasury company. I think that's like, and I think we're talking about the latter here. So like actually, why would anyone do this? And I think like the first thing is like, obviously you can kind of like start a digital asset treasury company for assets that are currently not ratified to be in a ETF. So like where the Securities and Exchange Commission, is that the right, whatever US agency takes care of the ETFs? We talked about this like a couple months ago, I feel like, so I should know, but I forgot. But yeah, so like you can launch a DAT for Solana or for Barachain or for Dogecoin or for whatever meme coin you want to, really. And the model is pretty simple. Like you just kind of like do a hostile or like a friendly or a hostile takeover of any already listed company, and then you basically just use the treasury, or like you inject new capital into that company to like do I mean, you turn that company into the digital asset treasury company. And then another benefit of this is like ETFs currently cannot be staked. So even for Ethereum ETFs, you cannot participate in the staking of the network. You cannot secure the network, or like gain
You can
yields.
now.
Oh, in the US
Yeah,
as well.
Grayscale and Invesco are staking their ETFs. They've started already.
Oh, okay.
Yeah.
I stand corrected, but still, with those digital asset treasury companies, it's kind of like you're almost just investing in a hedge fund, which like main strategy is like, I'm gonna hoard ETH, and sometimes they even like they will take up leverage. So famously, I think MicroStrategy is like it's fully levered, like it's just giving out more depth and more depth and more depth, and acquiring Bitcoin with that. So actually, like I don't even know how this would work by now, but like if you look at the balance sheet of MicroStrategy, it's essentially they've issued a ton of debt, acquired a ton of Bitcoin for that debt. So like I think they like technically they're in a leveraged Bitcoin position at this point, because like the only thing that's kind of like securing that debt is like their Bitcoin holdings, but they've just like it's way beyond what they had like initially in their treasury. So like I think this is kind of like me taking money out of Aave, like then redepositing that money into Aave and then just like building up leverage that way. I don't know if you like maybe have data on this, on like what's the leverage position of like each of these digital asset treasury companies. But that's also something to consider. So basically, like in an ETF, you're like very boxed in. You can only do this one thing, and like everything you like additionally do, you need to ask the regulators for permission. While in digital asset treasury companies, it's like as long as it's like a legal operation to kind of like run a publicly listed company, then you can just kind of like employ that strategy. So they're kind of like just becoming like kind of alternative investment vehicles to get exposure for crypto assets. From an investor perspective, it's not that much of a difference. Sure, there's like some different trust assumptions and stuff like that, but whether you are like a retail trader or like a whatever pension fund or anything like that, you can like invest into those both vehicles, kind of like in a similar manner. So it's purely about kind of like there's a regulatory arbitrage happening here, where a lot of these assets are not classified as securities, or I don't know, whatever. You can't launch an ETF with them, and therefore these digital asset treasury companies have spun up as kind of like a way to get exposure to, I don't know, hedge funds and bankers and retail traders and whatever, like everything from a retail trader to big institutions, to get exposure to these assets. So yeah, quite a interesting phenomena. I think like similar things have happened in the past, where like, I don't know, gold mining companies have actually oftentimes just held a lot of inventory of gold. So they kind of like become vehicles where it's like you like want gold exposure, but maybe you want that to be leveraged. So like instead of just holding gold itself as like a commodity, you like buy exposure to this company, which might have also like taken up a leverage position by kind of like taking out a loan against the existing gold and then buying new gold. But yeah, that as a short like kind of like, why do these exist? How should we look at them? And maybe like why has this recently kicked off? And I think it's a demand from the market to get crypto exposure in kind of like their native rails, which is stocks. And so people have just taken the native rails and kind of like put crypto into them through a backdoor, which is a digital asset treasury company.
Yeah, I think that was pretty like good, how to say, decomposition of what DATs mean. And one thing I wanted to maybe highlight on top of that is like DATs probably is not really for retail in the most attractive for retail, because for retail you can already buy Bitcoin or Ethereum. It's mostly for the institutional investors who are probably afraid of like getting into crypto fully and probably prefer to invest in stock markets, will be likely more interested. And again, sure, there's ETF, but so why they want to do that? But basically, compared to ETF, my understanding is like that basically you have the liquidity in hand. You can do anything on chain with the Ethereum or whatever the crypto you hold. You can basically like stake them, restake them, multiply your yields, and like put them in vaults here and there. So it's kind of like an extra yield compared to ETF.
Yeah, so I think ETFs are gonna be like more like akin to like spot investing, where maybe you're gonna get some yield, but usually risk free, or at least really close to risk free. And then DATs are gonna be a little more free form, and people can. It's it's gonna be based on depth, and there's gonna be a lot more things akin to leverage, and therefore riskier of an investment. Yeah.
With that, I guess I can get into the way to talk about what are the metrics people look at for DATs. What is a good DAT? What is a bad DATs? So we have Ali here, who built the dashboards together with me. And if you want to pull up the screen and give us a walk, that would be great. Thanks.
Yeah, I think kind of like what Danny mentioned earlier too, Pantera, where we both work, has been one of the loudest and like I think earliest supporters of DATs. I know Cosmo was kind of talking about it back in May, June, before some of these even were live. So we kind of wanted to put our money where our mouth is and make like a comprehensive dashboard so you can get a full picture of not only the DAT landscape, but individual companies and kind of how to comparatively analyze them. That said, I wanted to point out that we're hoping to ship this, the full version, like in a week or so. So this is a beta version. There might be some kinks here that we need to iron out. But yeah, we're really excited about it. So I thought I'd walk through kind of what we put together. If you guys have any questions or want to jump in, feel free. But I guess to start, we kind of put together 3 different tiers of like kind of diving into these stats. So the first page is kind of comparatively looking across the entire landscape. Then it's by asset for the core 3, Bitcoin, Ethereum, Solana. And after that, we can go into a sample company, maybe BitMine, because I already talked about it a little bit with Tom Lee.
I have a question. How are you tracking these? What exactly? How is the data getting inputted? Is it based on reportings? Is it based on like on-chain data? Like what are you tracking here?
Yeah, that's a kind of the trickiest part of putting this whole thing together. So most of the data, all the data is automated. We didn't want to sit here and kind of manually input, numbers from filings that are kind of issued every Monday. That said, a lot of the data comes from SEC filings for most of these companies. Then we're also pulling like some equities data, price data, and we haven't quite incorporated on-chain data quite yet to track like yields and stuff like that. But hopefully that's a down the road sort of amendment to it. Yeah, most of it's from SEC filings.
We do have an appetizer for the on-chain part because we know and also agree that like on-chain tracking would be very important. And so Ali scraped the information of like if the stats company is disclosing their on-chain wallets or not as a first step, if they're showing transparency or not.
Yeah, I think that metric is tracked up here too, and you'll see it on the company pages as we go through it. But also to point out, a lot of these companies, it's very inconsistent how they kind of file certain metrics. And, like most of them file balance sheets every quarter, but then like sometimes their holdings updates, they have to file in between these if they choose to do so. And some just don't. You have to go and like look at their Twitter or a blog post or something like that, which is always fun. Yeah, but so here we're kind of walking through and comparing some of our top DATs to like the equities market to kind of give a whole picture. Like, okay, we can look at DATs, compare DATs to each other, but how do they kind of stand up against, like the Apples and Teslas and whoever else? So that's what this sort of leaderboard is trying to get at. I think the core metrics we were tracking too, just general trading volume, price growth, and then also the premium of these companies, which I don't know, Danny, if you want to talk about that metric or not, 'cause I know you were diving into it a lot.
Yeah, I mean, just a quick comment, which is like, if you're an investor, you look at all the DATs, you'll wonder like, what's the one that's trading at the highest premium, and what's the one that's trading at the highest discount? And premium here, I guess we have to dive into a little bit of all the definition. Pretty much means that your how to say stock value versus the NAV per share value comparison, as in like for one share of a stock, how much value it represents or it holds versus how much the stock market is pricing it at. Is it like a premium or is that discount? If it's a premium, meaning like the market is super bullish about it, and retails, I guess, on the market, whoever is buying in the market is buying it with basically, premium, as in like they're buying at a higher price. If it's a discount, meaning like the stock market price is below even whatever the per share holding for the asset value. So I guess like if high premium, it's probably showing pretty good. I do want to caveat that, like, for example, here, this one that we're showing almost 1,000% is like still some nuanced data we're fighting against, because so how this data can go around, like all these, this is another motivation why we want to build the data dashboards, is that shout out to all the other data providers out there. Blockworks has a dashboard. Artemis has one. Delphi Digital has a private one, I believe, if you're subscribed. But like everybody's number is different. It's not really anybody's fault to blame at this moment. It's just like the SEC filing is messy. You kind of like dive into a bunch of text and trying to extract the number out of it. And also the reporting cadence are irregular. And a lot of time people have to make educated guess in terms of like how much more potentially outstanding shares this company might have been issuing and being dripped out into the markets. And everybody may have a different like methodology to model or guess whatever it is. Some dashboards, as we know, is getting some data from the source truths from like those stats company being like, hey, we have this balance sheet, you can like just copy it on that dashboard. But not all the company will have that. And it's even like in your model, either you're using weighted average stock price or end of the day close price, it will probably make the outstanding shares difference by like 20 million or something. So it's really hard to have a standard. And like example for this, like is this one is showing insane high premium, but per our check yesterday, this company hasn't been reporting their crypto holding for a while, since August. And that means we are likely underreporting their NAV, if that makes sense. It's like we don't know how today they might be holding more crypto asset. And so this premium division will probably like mark the market price overly, like higher. So we're still going through like some data QA check, but just want to throw out the nuance out there. But yeah, as Ali mentioned, we wanted to not just compare within DATs, we want to like trying to benchmark them higher and be like, hey, you should also be a good stock compared to others.
Yeah, and I think just a note too, we're gonna try and put together a whole methodology doc. So all of our assumptions for these various calculations will be written in stone somewhere. So that's forthcoming in the next couple weeks.
Maybe so the metrics you track here are trading volume, highest market cap, highest price growth. I mean, price growth and market cap I can kind of see, but trading volume, transactions, and premium, I think they all kind of like deserve some kind of explanation, since like volume could mean a little, like, is this just like how much has this been traded on the stock market?
Yeah,
pretty much.
Okay, across all brokers. And this data you just pull from, I don't know who reports on this, maybe a Bloomberg API or something like this.
it's a Polygon.io, so not the chain, but it's a data provider called Polygon that kind of has comprehensive like equities data and stuff. So
Yeah,
I think they track across brokers.
Can we drill down into the full ranking for each of those?
The table below it is kind of like a basically
okay,
day snapshot, and where you can rank all these metrics.
Okay, cool.
Pretty much rank them. Yeah.
Yeah. So this is, I think right now we're tracking 33 different DATs across Bitcoin, Solana, and Ethereum. But like, as I said earlier, this overview page will give all of them, and we'll have more notes to kind of know, like, hey, this one's from Bitcoin, and so forth. But this table just kind of pulls from all of them to give you a comprehensive look of like how it's trading on the stock market for the last available trading day.
Yeah, that makes sense. Can we quickly talk about the market caps and kind of like think about them in the context of, I don't know, the total crypto market cap, or even comparing them to different companies. Like MicroStrategy seems to sit at 86 billion, if I can read this correctly.
Yeah.
How big is this? Like I'm struggling to like put a scale on this. I think the market cap of Ethereum is like 400 billion at this point, something like this. So 500 billion. So essentially, six of the market cap of Ethereum is MicroStrategy. So like that's how much Bitcoin MicroStrategy holds now. But then how much of that is like actually held by them in Bitcoin value?
MicroStrategy holds 400. Well, the thing is, it's not super clear given the leverage part of this. But from what I could, actually, you have a higher number. Okay, I looked on Intel Arkham earlier, and they're tracking on chain and trying to get the wallets, and it's I guess they don't have the full picture.
I was going to say that a lot of these companies don't actually report their wallets, although report like a couple of them. So I think it's really hard to kind of be able to piece that picture together. But I think Arkham's doing a good job, at least tracking what they know.
Okay, so the market cap of this company is 86 billion, and now we've gone on the like company specific page, and we see that their net asset value, is that NAV?
Yeah.
It's only 73. So there's a gap of 13 billion in here somewhere. Is that just the like equity value, or like the rest of MicroStrategy essentially, or like how do we explain this?
So if you take market cap and divide it with NAV, then you get MNAV. That's what everybody been talking about. It's like if your MNAV is above 1, then it's meaning market is bullish and pricing your stock asset price higher than what you're even holding. And this is the case we're seeing here, right? So like 80 something divide 73. Here they have a 1 plus something MNAV. Yeah.
Okay, so it's actually just the market is kind of being stupid. I mean, more like the market is like over the long term, the market's always right, but in the short term, the market can kind of be wrong, right? So, but like MicroStrategy holds Bitcoin that's worth $73 billion, and the market price to like buy a share of these is essentially like, I don't know, 86 billion, which like that doesn't really make sense, except for if you value the rest of MicroStrategy at 13 billion, which I think is a little bit of a stretch. So just so like we clear that up once. So MNAV stands for, what is MNAV?
Multiple NAV. It's kind of like a term created by MicroStrategy, and now it's kind of like gold standard or North Star for every company being tracking the metrics. And again, like, is this stupid? I don't think so, because if you believe MicroStrategy stock price will go up beyond 80 something, you will buy it, right? And the kind of like here touches like kind of like the flywheel thesis, which is like the whole reason why people think DAT works is that if you are bullish that one crypto asset price is going to go up, you first launch a bunch of shares out as a DAT, and then the market going to buy it. Whenever the market is overpricing it, this company get the extra basically to issue extra shares. And when they issue extra shares to dilute it a little bit, so the MNAV goes back to like maybe 1-ish, they get extra money, right, from issuing the shares to private investors and stuff. They can use that money to buy more crypto. Like they will buy more Bitcoin into their inventory. And so now their NAV goes up. So their stock market price should go up. And at the same time, because they keep buying, the crypto asset value are basically pushed up by them. So that's kind of like the flywheel's case, right? Of course, it will fall through if the MNAV number goes below 1. And if any DAS company keep issuing more assets, you keep diluting below MNAV, that's kind of like the end of the story. When MNAV goes below 1, you kind of need to buy back your shares and trying to hold MNAV at 1 and trying to gain trust and like keep yourself stable and like then go back to the flywheel. That's my understanding. Yeah.
On this chart you're showing, I guess that's MNAV over time. What is the difference between the dotted lines and the non-dotted ones?
It's just because we have so many items on this chart that I just quickly hatched a dashed line so we can see the difference between them. But it's just a different ticker.
All right, okay, cool.
Wait, so like we're seeing a couple companies that like have MNAVs like above 5 even. Like how, like I would kind of expect everything to kind of oscillate around 1. But so how do we explain companies with a MNAV of 8?
I mean, there's still a premium to like, because it is like kind of like a leverage trade. So I would expect over 1 if people are at least a little bullish on what they're investing in. I guess that's like the baseline expectation. Otherwise, they all fall through, and like if they oscillate over around 1, basically, you're kind of like stuck, I guess, in a way.
It's also possible, like if you think about the formula, right? Like on the top, it was market cap, meaning stock price times outstanding shares. And the one below the line is the NAV, meaning like the crypto asset and the amount they hold. So crypto asset is pretty volatile. When the crypto asset price drops, your MNAV also goes up. So like it might explain what's going on here, like starting from September. It's kind of like, I think like there were some market shock around October 10th. So it's like MNAV is like a lot of things in factors. It's like if crypto asset drop or increase, and then how the stock market people may react, all can factor into these numbers.
All right, we can go look at BitMine. I think we were talking about Tomly a little bit earlier too. But this is one of our core company pages. So each company that we're tracking will have its own page under the asset it's actually holding. So for BitMine, kind of pulling, and I think we also talked about this earlier too, the shares outstanding kind of varies quite a bit across different reporting methods and different APIs and stuff like that. So you can see here too, the last time they actually filed something with the SEC to give a share update was back in July, because they only update it every quarter. So you kind of have to supplement your data sources with, different other sources, I guess. One thing that we're kind of really excited about, and was the core reason that we kind of put this thing together, was dilutive impact and like some of our pro forma calculations, which Danny has been spearheading. So I know she's really excited to talk about it too.
Yeah, I mean, like that part is basically one of the few like misconcepts or people were not reporting in the beginning when everybody started looking at DATS numbers. It's basically like whenever all these pipe investor or like I guess a private arrangement, something. When these investors get to invest before the data become publicly accessible in public markets at a very discounted price, they also get usually a warrants paired with the investment. So oftentimes the warrants is also at a very discounted price, maybe slightly higher than the pipe investment price. Oftentimes it's that like these large amount of outstanding share can be exercised pretty soon after the DAT company become live. And if we don't track like the fully diluted, right, like you're probably not tracking the whole picture. So here with the warrants number and their exercise price considered, we're trying to also picture what's the total pro forma accounting for all these metrics. Yeah, that's one thing there. But my most proud feature for this website is the recent SEC filing one. I think it's a great idea to just like basically link the source of truth there and like a Etherscan style, and so people can just like go click it and just like try to double check all the numbers they're seeing here. Pretty handy. But yeah, below we have a bunch of time series charts, pretty much tracking their asset holding, their total NAV value. Even if they hold same crypto, the value changes with the crypto asset price, and we're tracking their outstanding shares and market cap and many others. Yeah. So from here, I think like there are a few misconceptions and like basically also the motivation why we want to start these things. And like one other thing on the top of my head I want to point it out is a recent discussion internally we had about determining how should we account the pre-funded warrants. So basically, when a lot of companies issue DATs and when they issue warrants, their investors or even the operators who are basically just the actors in the whole process, right? Like they get some warrants to buy, and because company doesn't want to like keep filing SEC filing, the requirement is like whenever you exercise 5% of the company, you will have to report a SEC filing. And because a lot of company doesn't want to keep doing that, they just pre-fund all those warrants, being like, we'll put all the money in there, like a few $100 million there. And basically later on, these pre-funded warrants exercise price is going to be looking like $0.001 or something. It just will not have actual impact on the asset balance sheet. But here's the thing, like our opinion is that you should account all these pre-funded warrants outstanding shares into your outstanding shares total account. Why? Because the money is already in the balance sheet. And if you look at the formula, the money is already in the NAV. And if you are not accounting the shares, then you're mispresenting the MNAV. So that's another thing we want to basically present with the dashboards.
Are you considering all of these? Like, so there's public filings for all of these warrants, and you're essentially like you're incorporating that for your MNAV calculations?
Yes, we're including the pre-funded warrants, and we have a table ready for the all the warrants dilutive impact coming soon, hopefully together with the public launch.
Okay, but currently the MNAV is not influenced by this.
Yeah, but currently the charts that we're showing do not include it. It's one of the things we need to kind of put together to kind of ship the whole app out.
Okay. So
and we'll also
that
have
would also. Oh, sorry. Go ahead.
I was just gonna say we also have like a toggle, so you can see a with and without pro forma with all of our charts. So you can see the MNAV that will kind of be more comparable to a lot of the dashboards you see out there right now, and then with the pro forma on, it will have that dilutive impact that Danny's talking about.
Okay, that's super interesting. Like that seems like a innovation in reporting on DATs. Does this also explain like some of the like MNAVs that are like much below above 1? Because that's like, okay, that would explain like, okay, they have some extra money in the treasury, but it's like, okay, there's outstanding shares, or like these shares have technically kind of already been sold. It's just like when you do the accounting, this is like, I don't know, they're cooking the books a little bit. Like, not cooking in terms of like they're doing anything illegal. They're just using kind of like legal accounting hacks. Okay, interesting.
I am curious if you have any other like metrics that you think you would be willing to like introduce, or to to look at those in, I don't know, any angle that you think is currently not really presented, that you might have found interesting.
I think the first one that comes to mind, you guys kind of already touched on, which is kind of accounting for the debt and these like leverage positions. That isn't really captured. I don't think there's a dashboard out there that kind of tracks that stuff right now. But that's probably a future version of this app. It'll take a lot of work to kind of get that stuff out of the SEC filings.
Is more of that debt issued on private or public markets? Because I think the MicroStrategy debt, they're just kind of issuing this as a bond, if I'm not mistaken. So like they're just literally like issuing this on the stock market as a bond, and like instead of buying whatever treasury bills from the US, you can buy MicroStrategy bonds for I think 7% or like some ridiculous like APY, because it's like a higher risk asset, right? Like but looking at the faces here, you don't. The answer seems to lie somewhere else.
Some other metrics, I believe other providers also start tracking this, which is just like crypto per share, as in like if you're buying per share of the company, how much crypto are you holding? It's kind of like basically how much multiple of the leverage is, right? And leverage on top of the crypto assets price. And also just like the growth of the company's shares, and just to see how this company has been issuing more and more shares, and kind of like it's kind of like a positive features if they can keeping it like at a positive rate, that basically they are basically bootstrapping the recursive reflexive cycle. But yeah, I think with all these presented, I'm curious all of your thoughts is if you think better of that now, or like, is it that good or bad in your opinion?
I think it's good. It's more of it's a new vehicle for traditional TradFi to come in and invest into crypto with a bit more of a leveraged position. Of course, just like everything in leverage, it can derail when things go wrong. But I don't think it's like like we already have things going wrong in the crypto market when things go bad. It's not like new. It's just one more new thing that can go wrong, and things will self-regulate over time, I guess. So yeah, overall positive, of course.
I don't know. Like these are essentially like people are taking over companies, and then they're just kind of like buying crypto with these companies, and then they're also taking on debt to buy more crypto, and then they're using that crypto to secure new debts. So like, I don't know. This seems like a situation where like we're just circularly like sure they're all like basically like hedge funds that have levered positions on crypto. So if we ever encounter another Black Swan Friday event, whatever, Black Friday, I don't know how all of these like I'm a bit unclear on like how the unleveraging of these things hits. And it's also like eventually like MicroStrategy has taken on like billions of dollars of debt. They will need to eventually start selling Bitcoin to pay back those debts. Like I don't know. This seems like a thing that's like very cool and easy at the start, but like as time goes on, this kind of it seems like a risky thing. But let's like from my limited view of like whatever definition, like I think this is like financial engineering, which is like there's like a lot of whatever like asset market like structure things that are like beyond us, like I don't know, us crypto analysts, where we're like, okay, we don't really fully understand the depth of this, but like I don't know, it doesn't seem like exactly kosher. Like I think there's like a little bit of like a weirdness to these, where it's like you're abusing the stock market rails to get crypto exposure while you could just actually get crypto exposure itself. And like I think these kinds of situations always kind of invite bad players. And like I think now, especially with like there's so many companies who are now launching them, it's like kind of smells like quick money, and like that usually doesn't attract like the best builders or like the most straightforward and honest people. So we'll see how this ends. For now, it's probably good that like, yeah, sure, buy my crypto backs, please. I always like that. But like, how does this end long term? We'll have to see.
Yeah, I think it's largely a net positive. But I think kind of like what Boxer was saying, that it's very dependent on like a per DAT company basis. I think some of them are kind of questionable at best. It just seems like a cash grab, to be honest. But I think others who have kind of, developed their own stance before the whole DAT train kind of came to be, might be okay, might last like longer term. But I think in general, institutional adoption and more regulation for crypto in general is good. So who knows? We kind of see what happens.
Yeah, I'm definitely bullish or overall positive. I think it's always risky for all these kind of investments or new investment thesis. And I don't think some people say it's like meme. Basically, it doesn't really stand for any like real business or like value behind it, except just speculating the asset price. I think yes and no. First of all, it's regulated in the SEC filings and like in the stock markets. It's definitely safer than meme, who can just rug you and like insider trade you and everything, which is all illegal in this case. But also at the same time, it's longer vision. How to say? People who are launching the DATs are loaning the assets, like they're trying to stand by the thing for a long term, rather than meme is just like really quick money grab, right? And so I think overall it's definitely way more positive than what people have been criticizing it about. But it's definitely a lot of like bubbles of like you don't need 100 DATs for even Bitcoin DATs or Ethereum DATs, and you surely don't need a Berachain DAT in my opinion. So like first of all, if the asset is legit enough that it can actually hold the value is one thing, and the other is like the company who's operating will actually care about their value and like trying to be careful with their strategy, not really issuing and diluting crazy and everything. Well, it's a risky bet on the operating for sure. But yeah, I think we'll see how this whole market goes in a few months and how many gonna survive.
Yep. Guess we'll all find out together if the market crashes because the DAT is over leveraged. So no escaping. But right, this has been the Index podcast on digital asset treasuries and digital asset treasury companies. We hope you've enjoyed this episode. I think Pantera Capital and I think Danning's Twitter and Ali's Twitter are going to be linked below, so you can follow them there to get access to the full dashboard when it's out in hopefully a week. I mean, I say hopefully a week. That's for you. It's for you guys to make that happen. But yeah, we'll see you again in 2 weeks. See you, everyone. Bye bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar, we call them out and set chart crown on fire.